Hey everybody, it's hwsteele, and this is the first video in a series of videos I'm doing about forecasting price levels in stocks, commodities, and futures, which I guess are commodities, but Forex, that's what I was trying to say, Forex markets. I want to apologize right up front really quickly because I have a cold right now, so my voice may sound a little bit off. I might be pausing the video here and there so I can clear my throat or cough or something like that and not have to subject you folks to that. So, that warning up front. This first video, I want to talk about the secret price levels that the initial public offering price of a stock give that stock. Okay? Sounds pretty fancy, huh? But it's actually very simple. What you do is you find a stock that's not very old and has not split yet, and then you go back to the very first day of trading and find out what the IPO price was. More specifically, this is Tesla, and this is a relatively young stock. This is my first stock as an example. I love Tesla. Easy to forecast time and price as far as I'm concerned. But anyway, going back to what I was saying, more specifically, we're looking for the actual open price of the stock. 'Cause for instance, Tesla's IPO price was $19 a share, and it opened at $19 a share. But stocks don't always do that. Sometimes you might have an IPO of $19 a share, but it actually opens above that or below that. And typically what we're looking for is the actual opening price of the stock. The very first price that the stock printed at is what we're looking at. That's what's going to imprint on the stock, if you will, a certain number that's important to us. Now, once you find that IPO price, all you're actually going to do is multiply it by certain numbers. The most important number is 2. After that, the most important number is 10. Then the most important number is 20. Between 10 and 20, which is 15, is important. Usually 5 and 7 are important. 3's important sometimes, but by far the most important is 2, 10, and 20. Okay? Other numbers are also important, but you kind of have to watch them. When you get to 2 times the IPO open price, usually, I'm talking like almost always, there's a tremendous amount of resistance. And if there isn't a tremendous amount of resistance, that means it's higher prices. You can expect higher prices, okay? So what I'm going to do here is show you on Tesla. I'm going to configure this to its IPO opening price was $19 a share. Where we're going to do, excuse me, we're going to do 2 times that, which is $38 a share. And then I'm going to zoom out a little bit. And we see that the very first time, and this is an important concept, there we go. The very first time it hits that price level, you can expect a lot of resistance. And we see that the market moved up to it and then basically froze there, couldn't get through it, and then retraced for months. It made the lowest low was all the way in August from a top that was in March, and the final low was in October. So it retraced a long time. The next number we can look for is 10 times, which 10 times 19 is 190, of course. And a lot of times, stocks will not perform as well as Tesla did. Tesla went in a sideways range of about 20 points for a few years, but then it went parabolic right here in 2013 and just went up and up and up and up. And just from the point right here in May, when it just really started going up all the way until September, the end of September, when it made its high, it just kept going up and up and up. But when it hit 10 times the IPO price, or $190 a share, it did just like it did way back there at the $38 a share. It hit major resistance. It could not break through, and then it spent a few months retracing. It was not as severe and long a retracement this time, because 10 times is usually not as strong as 2 times. But it did bounce off that and have a nice retracement of quite a few points. I think it was quite a few, 20, 40, 60, 70 point retracement or so. Now the next major price resistance level would be 15 times the initial IPO price was 19 times 15 is 285, because 15 is halfway between 10 and 20. And we see that if we scroll forward here, let me change this to 285, that Tesla made higher highs and higher lows, had a bit of a retracement there. But once it hit this price level, when it finally hit it for the first time, it had a major reaction from that. Over 100 points. It moved down in 6 or 8 months right there. So it had a tremendous reaction to that price level. The next major price level after that is, of course, 20 times, which 20 times 19 is the same as 10 times 38. So it was 380. So if we look at the price action here, we see that Tesla came way down here to about $140 a share in 2016. Then it came back up here. It hit a bit of resistance at these same highs that it had, came down, but then it broke right through it. And the question was, where is it going to stop? And the answer is, the market kept moving up until it hit 20 times the initial IPO price. And it has, if we look at it, it's hit this price level 3 times now and has not been able to break through. So as it comes up to its 4th time, if it makes it back up there a 4th time, it's either going to move significantly further up or significantly further down. But we'll have to wait and see when we actually get there. Now, those are the major price levels to look for. 3 times, 4 times, 5 times, those are all important also. But typically you have to watch the price action right around there. So for instance, zoom in a little bit back here when Tesla was still in a low range, 3 times 19 is $57 a share. Here we go. We see when Tesla got to that for the first time, it hit that, it retraced for a couple days, it broke above it, then basically sat on it, and then that's the point right there where it went parabolic and shot up tremendously. That doesn't mean all the stocks are going to, but the way it reacts to this as it moves higher and higher, you know that it's probably going to move at the very least to the next price level when it has such a strong reaction. And the next price level is, of course, 19 times 4. Whoa. 19 times 4, or $76 a share. And we see that the market actually gapped up to that and then broke through, and it just kept going higher and higher. So the basic idea here is you will get big reactions at 2 times, 10 times, most likely 15 times, and most likely 20 times the initial IPO price. 3, 4, 5, 6, 7, 8, 9 times the initial public offering price. You're going to have to watch the market to see if you get resistance. It'll probably be a smaller, a shorter term resistance, or it will just break through and head toward the next price level. Now, one thing I will say is Tesla was a really strong stock, so it just kept going up higher and higher and higher after the first couple of years until it hit that 15 times initial IPO price, and then it took a long time to be able to break through that. But once it did break through that, it was fairly obvious where the price was going, and that was to 20 times. It might have stopped at like 18 times or something like that, or even 19 times, which would be 19 times 19 or 361, but 20 times is actually stronger than that in this particular method. Okay, now I'm going to switch to a different stock really quickly. Where is it at? It's called Camping World Holdings. I'm just going to show this one really quick. It's a much younger stock. We see that its IPO was October 7th, 2016. So it's about a couple of years old right now, not quite a couple of years old. And we see that the its IPO, let me scroll over there, its actual IPO price, its actual open price was $22.78 a share, even though its IPO was set at $22 a share. So this is an example of something that opens at a price that's different than its actual IPO. Now you can look and you see that the stock moved down its first day of trading really. And if we multiply 2278 times 2, we get the 45.56 price level. And we see that the market moved up, and the very first time that it hit this price level, it just stuck there and it couldn't get past it. First time, second time, third time. Then the fourth time was it, and it couldn't break through, so it just started falling. And we see that the stock has fallen considerably. It's actually below its IPO price right now. So this stock has had a much more negative reaction than Tesla did. So it might have stronger retracement reactions at 3 times, 4 times, and 5 times its IPO price. But if you will set those price levels on the chart and watch them, you can help yourself determine future important price levels. And of course, you have to watch the market when it gets around there. And if years in the future, if the stock performs very, very well, then at 10 times the IPO price, or 2276 times 10 would be $227, we can expect a significant reaction right there. 15 times also, and then 20 times also, but it's probably longer in the future. Maybe, maybe not, I don't know. That's not forecasted with this particular method. This is a kind of a fire and forget type of a methodology, that you calculate these price levels from the original IPO. So all you need is the very first day of trading a brand new stock. You can do this too. And then the very first time that that stock gets to those price levels, you can expect reactions of some kind. Either like with 2 times, the market's going to make a big retracement, most likely, or with 3 or 4 times, the market might just pause and then move through, or it might be an acceleration point. But anyway, video's 12 minutes long now, so I'll go ahead and end it here. It's a very simple method to use. Hopefully it'll help some folks out, and I will talk to you again in the next video.